Hello and welcome to The Trade on this Thursday. Well, let's first take a look at what traders are watching out there today. Nvidia forecast its slowest revenue growth in 7 quarters, with the AI chipmaker failing to meet the lofty expectations of some investors who have made it the world's most valuable firm. Bitcoin has topped $95,000 for the first time in Asia trade, touching a high just above that mark as investors bet of a friendlier US regulatory approach to cryptocurrencies under incoming President Donald Trump. Gautam Adani, the billionaire chair of Indian conglomerate Adani Group and one of the world's richest men, has been indicted in New York over his role in an alleged multi-billion-dollar bribery and fraud scheme. And gold prices rose for the fourth straight session, driven by safe haven demand amid escalating tensions in the Russia-Ukraine conflict. All right, well, let's get into some technical analysis. I caught up earlier with Jason McIntosh from Motion Trader to see what he's watching this week.
Yeah, it's been fascinating how it's all been going. This is where I think things get really important, where we are right now with the we've got that post-election rally in place. And when we look at that S&P 500 chart, we can see that prices have rallied off the 50-day moving average. Now I've got the 50 and the 100-day moving averages on this chart. And the rally post-election off the 50-day average, that's taken the S&P 500 to a new all-time high. And now we have the pullback. And I think what's so important about this pullback is that we get to see how much interest there is in buying the dip. And this is important because if the rally was all just froth and hype around the election, then there's always that potential that prices could quickly retrace back to pre-election levels. But on the other hand, if there's money waiting on the sidelines to get in, then I'd expect the pullback to be modest and for the S&P 500 to hold most of those recent gains. Similar story when we look at other indices like the Dow, the NASDAQ, S&P 500 equal weight. They've all got that same basic structure. What we can do with this chart here, we can put on a Fibonacci indicator. I've got another chart where I've already put the indicator on. And what the Fibonacci indicator does is that it measures the extent of a previous rally and then provides a percentage-based range for a possible pullback. And so I'm using the pre-election low from a few weeks ago and the recent high. And in this case, a pullback to somewhere within that green area, you can see in the chart around where prices are now, that's proportional to the rally we've just seen. The Fib region, the Fibonacci region, it also coincides with the top of the price gap that we saw following the election results. So prices gapped up, the bottom of that gap. That's again around that Fib region, around where prices are now. So that's also an area of potential support. Just a word on Fibonacci regions. I don't use them to trade off, but and they also don't always work like any indicator, but they can help frame our expectations for a pullback. And I think simply just having an idea of what could happen helps us mentally prepare. I think maybe it's a case of prices trading around the Fib region while the moving averages catch up, maybe over the next 1 to 2 weeks. And from a price perspective, those moving averages are still rising. Prices above the 50 and 100-day moving averages. So that's all what we see in a bullish trend. I think it's still a case of I think what we should do with markets, we should be optimistic that an upward trend can continue rather than being pessimistic and looking for an end in the trend. And I think whilst those underlying conditions of an upward trend are in place, I think the play is continuing to approach this from the long side, being long stocks, but always looking to manage that risk for when things do inevitably change.
All right, so then, Jason, does that strategy likely to apply, do you think, locally? What sort of moves have we seen on the ASX?
Yeah, so this has been an interesting week for the ASX 200. It finally caught up with the US markets in terms of reaching a new all-time high. That was on Tuesday. And all-time highs are such an interesting area because so many people worry when we hear about an all-time high that the run must be nearing an end. And yes, at some point an all-time high will be the final high, but the odds favour that an all-time high will lead to more all-time highs. That's just how trends work. Just looking at Tuesday's price action, we saw that sharp move higher, and that was followed by a quick pullback. I think the inability to hold on to that initial break higher, I think that suggests that the market isn't quite ready to continue to sustain this advance. I think there's a good chance we see some more backing and filling over the next few weeks, possibly another retest of the 50-day moving average ahead of what could be a year-end rally. One more chart I want to have a quick look at. It's the ASX 200 equal weight. I think this is always worth keeping an eye on because it removes the dominance of a few big cap stocks. Like CBA has been a major performer to the ASX 200 recently, but it's just one stock. We want to look at the market from a broader perspective as well. And I think this provides that overall look at the market. What's interesting here is the equal weight hasn't confirmed the new all-time high in the ASX 200. I don't think that's a bearish sign, but for me, it's another indicator that the overall market isn't ready to move higher. And I think that's perfectly reasonable. The equal weight put on something like 10% from that September low. The fact it's pulling back from the high now, that's completely normal. Just looking at the market structure, 150-day, the 50-day and the 100-day moving averages, they're both rising, prices above there. So again, that's a bullish trend. The pullback we can see on that chart, finding support around the 50-day moving average. And that's something we often see in bullish trends. Prices come back to those moving averages often during an upward sequence. And also just noting, you can see that big range on the chart. Prices had broken out of a 5-month trading range. Oh, look, that was about 2 months ago. It's not uncommon. We get these breakouts. As you can see, we've got the breakout, we had the rally, you get profit taking, prices come back, retest the breakout point, which they've done. And this is the important time for a retest of a breakout. Do we find fresh buying on the pullback? Is the dip being bought? So far, that appears to be a case with prices stabilizing and coming off that 50-day moving average. Andrew, the game plan throughout this year, it's been stay long equities, of course, manage risk, and but generally be focused on owning stocks. And I don't think that game plan has changed in recent times.
Jason McIntosh from Motion Trader, and that is the trade for this Thursday.